Good morning, everyone, and welcome to the European crossover webinar. Let's see here. We are seeing the euro still pretty steady up here at this upper level, and we kind of referenced that yesterday, or really off of the analysis, was that how well the euro had come right back, and really it's open to continue to push higher. It looks like push higher. It's actually done that. We've actually been all the way up to right up here, up to 119, basically. It's continued to go and push a little bit higher, a little bit higher, a little bit higher. And that is a concern, is that, let's put this here. This weakening dollar and the lack of the dollar to respond when we did see that big sell-off in equities is really a problem. And we're not seeing much of any type of a bounce whatsoever. So really the door's open for that potentially for the euro inverse to the dollar to go on and really move to new highs. We'll see what happens or what transpires. I think we will do that. The question is whether we do that before any kind of a pullback. I'm not sure we're going to get a pullback, because if we couldn't get a pullback after, I'm talking about a rally in the dollar after we saw this good sell-off in equities, and where are we going to get it? It just doesn't seem likely, and it doesn't look like the Fed would be have any type of bearishly construed outlook. I mean, it's looking to be dovish, or continue to remain dovish. Now, to what people are having concerns as to what degree, and that the market could be disappointed, but I don't really see that really changing anything. So there we are there. Obviously, the dollar remaining here down the dumps, and we'll just take a quick look at the cable. A little bit of rally here with the cable, and we are seeing indices move a little bit higher. We can move into there. NASDAQ actually making a push a little bit higher. We'd actually seen a move higher in Asia. You can see here, and we've continued to move higher here. Actually, we've pulled away from same day VWAP. And looking here on the euro and the SPOOs. And I'll take a quick look at the gold market. I think about gold, it actually looked a little bit vulnerable yesterday, and here we are pushing back up higher again. But I think this has more to do, once again, with the dollar just not being able to find any type of a sustained bid. So gold actually holding up very well when it looked actually a bit vulnerable. With that, we'll just go on and look at the economic data. And we just got Italian CPI, and that came in line at 0.3. Do have German zoo numbers. Now that'll be out at the top of this next hour, and at the top of the next hour we'll also have Eurozone labor costs. As we roll into the States, I think we covered that yesterday, we'll have New Zealand dairy prices, and then at 8:30 Eastern, New York Fed manufacturing, along with import-export prices and Canadian manufacturing sales. 9:15 Eastern, we'll have industrial production and capacity utilization. So obviously a little bit more data than we had yesterday. And let's just take a quick look at the news. The Aussie dollar reverses losses after the RBA meeting, and the New Zealand dollar is steady. The Australian dollar reversed early losses on Tuesday after highly anticipated minutes from the central bank's September policy meeting stopped short of signaling a further cut to the cash rate, while the New Zealand dollar was steady. The Aussie was last up at a 73.04. Wow. From 72.68. And that's actually, right now, the Aussie's right at our bias chart resistance and from 72.68 before the minutes were released. The minutes showed the RBA will maintain its highly accommodative settings as long as required and will continue to consider how further policy measures could support the economy. However, it did not indicate a policy action was imminent. The Aussie has meandered since hitting a two-year high of around 74.13 on September 1st as market pricing shifted rapidly in favor of a cut to the cash rate to the 1/10% after its September meeting. Interest of futures are still almost fully priced in a 15 basis point rate cut in October. The RBA last eased the cash rate to an all-time low of a quarter basis point in an emergency meeting in March, and at its September board meeting hinted at additional policy measures to support an economy reeling from the worst contraction in almost a century. The remark stoked speculation of further easing. Across the Tasman Sea, the New Zealand dollar was fetching 67 cents above a recent trough of 66.02, partly on news the government would lift the coronavirus sanctions across the country on September 21st. New Zealand government bonds were slightly weaker with yields up a basis point in the long end of the curve. And we may see somewhat muted activity ahead of FOMC tomorrow. Now the dollar is softer on improved risk appetite, and the yuan soars. The dollar dipped against riskier currencies on Tuesday as hopes for a COVID-19 vaccine and big corporate deals improved investor appetite for riskier assets. The yuan jumped to a 16-month high as a series of Chinese data points to steady economic recovery in China, while the Australian dollar was bolstered by policy minutes from the country's central bank, which stopped short of signaling a further cut to the rate. And just looking at some after-hours traded equities. The dollar index slipped to 92.91, pulling away from a further one-month high of 93.66. Touched last Wednesday, the euro inched up to 18.89. Helping sentiment was AstraZeneca's resumed British clinical trial of its COVID-19 vaccine, one of the most advanced in development, while Pfizer and biotech proposed expanded phase 3 vaccine trial. It was uplifting that Pfizer had made clear a target of vaccine as risk assets bounced back. The dollar has lost momentum, said Kayosuke Suzuki. The Australian dollar gained 0.4 at 73.16 as highly anticipated minutes from the central bank's September policy meeting gave hint to a record low interest rates that will be cut further. Chinese yuan rose to a 16-month high. And let's see here. The British pound bounced back to 28.85 following a fall of 3.66% last week, showing limited reaction if the UK government won an initial parliamentary vote in the controversial bill to violate the Brexit deal with the European Union. And still traders said the currency looks vulnerable as the EU warned British Prime Minister Boris Johnson's bill would collapse trade talks and propel the United Kingdom towards a messy Brexit. Investors now look to central bank policy meetings in the U.S. on Wednesday and in Japan and Britain on Thursday. This week's Federal Reserve meeting will be the first since Chairman Jerome Powell unveiled a shift toward greater tolerance of inflation, effectively pledging to keep interest and rates lower for longer. Projections from Fed policymakers that inflation will remain below 2% in the economic forecast to be extended until 2023 this time could strengthen expectations that interest rates still stay low for a long period of time, analysts say. With that, we'll move into the analysis. Okay, and look at this euro continue to advance, and this the euro's held up, but I guess my the weight of my thoughts was really with the lack of bounce that we saw at the dollar. I mean, the dollar is just absolutely pitiful. I mean, we couldn't even get to the 93.89, which is, or 93.87, which is the key area for resistance. You would have thought after the sell-off and shellacking we saw last week, my thoughts were we should be at least 200 ticks higher. So it just shows you how weak and vulnerable, and why it doesn't surprise me that the euro continues to move higher. It looked open to moving lower, but like I said, with the lack of the dollar being able to do anything, it doesn't surprise me that we continue to push up in here. And once we get too high, once we get, and I think it's going to be about 1952 is what I thought, is that, well, you can see here at 37, is where it's just going to basically blow the doors, and that's it. We'll just really getting back above last week's high right here, the 1916, is really going to get things popping and moving up in here. That being said, let's just move into the quick analysis on here. The euro continues its advance, stalling at Monday's buys chart resistance, because yesterday we had 1885, and I think the high was 1888. Then we dipped back. Resistance will be 1917, with support at 1770. So let's go on and pull this up. And 1770 might just be a little bit too low. Let's go with the 1917 here. And support is to be right there, 1814. And moving on to the cable. So the cable broke above buys chart resistance, but stalled at the daily 29.23 area yesterday. Resistance will be the same day level, which is the 29.23, and support will be 27.72. Well, we're really clipping along up in here, so once again, we'll probably have to adjust from where the analysis is in Asia, to adjust for the support to move a little bit higher. So that we know the resistance is going to be 29.23. And support, we did move it up to 27.72. Let's take a look at here on a 2-hour chart. Yeah, right there, 28.11. And moving to the Aussie dollar. The Aussie held steady yesterday. It held steady on Monday as risk rallied a bit. Resistance will be 73.08 with support at 72.33. Well, we're actually pressing against this level here, this key level, it's right there, 73.28. That's where that level is, 73.28. So that's the resistance. I mean, I thought we opened the door for a little bit of a pullback, but holy smokes, the things completely continue to move on. So this would be 73.28 for today's resistance, and that is a major resistance there. And support, we'll go into the 2-hour chart. You can see right there, next 73.36. Support, 72.37. Onto the Kiwi. So the Kiwi moved higher with risk on Monday, closing above 66.85. Resistance on Tuesday will be 67.24. You can see the key level right there. With support at 66.26. Right there. This dollar, I think I mentioned it, or we spent some time last week. We were talking about, I think we did on Thursday last week, I think it was. This dollar's in a lot of trouble. This dollar, I think I mentioned that to y'all. I think this dollar is going to fall when it breaks. Things going to fall easy, 200 ticks when it breaks those new lows. Easy. And support, I think we did move that up in here. Like I said, I don't go with all this, oh, project here, project there. Look, if you can't rally with the indices falling out of bed last week, you're in a whole heck of a lot of trouble. And the dollar index is in a whole heck of a lot of trouble. The only way that's going to change is if the Fed all of a sudden flips, reverses course, so to speak, or, you're seeing interest rates in the U.S. start to really zoom, and that won't set it higher. It just allow it to recover or hold its own for a little while. And we had 66.26. Okay. Moving on to the dollar CAD. The dollar CAD finished the day flat. Bias chart resistance support will remain the same. So we've actually took a little bit of a dip here. Now we're kind of holding, but we haven't gone anywhere with the dollar CAD. And pretty disappointing considering how oversold it is. Basically looks pretty reminiscent of what the cash dollar index looks like. So 30.96, 30.24, that's it. And let's go and move on to the dollar peso. The dollar peso closed on its low and at support level of 21.08. actual low was 2107. Support on Tuesday will be 2098 with resistance at 2118. So trying to hold in this area here. You see that? Even dipped a hair bit below here. Let's see what the low was. 2 hour. It got as low as 2101. Looks like it's going to hold that area here. Actually seeing a bit of a rebound now. Well, we'll still stay with the 2098. Actually, I was going to put it for 2102, and I said, well, in case they've done some stops. So 2098, 2118. And move on to the dollar yen. So the dollar yen slid lower to start the week, opening a possible test to 508. Support will be 548. You can see they've already made that move down here towards there. With resistance at 622. So the upside might be a little bit stretched. I have that. We'll keep the 622 as we move into FOMC, so we'll just keep that for now. And on to the cash dollar index. So the dollar just closed a bit lower to start the week as we get into FOMC. Resistance for Tuesday will be 93.70, with support being 92.67. So we're keeping this here, really more about tomorrow's FOMC. I mean, this should just drop like a rock down here, probably like 93.28, but we'll keep it there in place for in light of tomorrow's FOMC. Support will be 92.67. And it's down to 93.70. And with that, we'll move on to the cross rates. Nice steady firmness here in the Kiwi yen. Has opened the door for a little bit higher move back. The real resistance comes in at 71.40. And I'll tell you what, we're going to put it here for the 71.40 because with everything kind of bouncing around, if we do get ahead of steam, that's what it's going to want to go to anyway. So 71.40 on the resistance. And support, you can see it right here at 70.59. Let's put right here, 70.53. And onto the euro yen. Kind of basically holding steady here. I don't really see any changes here. We did have 26.43 on the upside. That might be a bit ambitious. That's where the resistance comes in right there. 25.94. Even if you stretch right to here, that gives it a 25.98. Tighten that up to 25.98. And on the downside, if we do get a break here, volume comes in at 25.05. And to the euro odd. No changes here. We're just dead in the water here. So no changes here with the euro on. We're just kind of poking on either side. 63.40. So far the high's been 63.23. Yep. So no changes. Moving on to the euro kiwi. Kind of slipping here to the downside here. On the upside, we had 78.42, which is obviously a stretch now. You can see this market struggling here, especially with the strength of the kiwi. So resistance is now going to be 77.46. And support right there. 76.14. Next is going to be the Aussie yen. No changes here in the Aussie yen. Look at that. We're just trading fairly quiet. No changes. And on to the guppy. Trying to make a stab in here and hold. Downside support is going to be 35.26. We may have already had that there, which we do. And the upside, right there, that low, which is 36.73. Onto the sterling odd. Trying to make a stab and hold in here. We'll keep it simple, and the low is just going to be right there at 74.90. We'll keep the no, move it to 90. And the upside is going to be the key level right there. 76.71. And that'll do it here for FX. We'll go back to the indices. We are seeing a push here, a little bit move higher. That being said, that's really being attributed right now to, you can see some after hours trading right here with Apple on its highs. We do have the Apple event today. And a little bit of minor jump here in Microsoft. You can see Amazon, a little bit of a gap up here in after hours trading. Tesla also pushing up higher here. NVIDIA, just a little bit of a positive move and slight. That's actually giving a little bit of a bid to the NASDAQ. You see here, a little bit stretched though. Maybe able to fade just a tad bit, not a whole lot. And referencing gold again, we're holding up very well with gold, and it looked vulnerable. But like I said, with the dollar so weak, it's providing a nice little undertone bid with gold. And crude, still languishing near the lows. Really no reprieve whatsoever. Well, that'll do it. Thanks for joining us here on the European Crossover webinar. I'll get the bias chart posted in the room, and we will see you in the chat room.